CNBC's Jim Cramer wants Gen Z to learn to be more frugal. So, CNBC financial analyst Jim Cramer thinks Gen Z millennials are spending too much on discretionary items and not putting enough aside for investments despite economic challenges that has many young adults living paycheck to paycheck. They seem like they have a lot of money, even when they don't have a lot of money, Kramer said of those between the ages of 18 and 24. Kramer said that youngsters who frequent the restaurant that he owns in New York City often order $14 margaritas, as if money grew on a tree. On the one hand, you're allowed to have all the margaritas you want, Kramer said. But on the other hand, you say I can't invest, I have student loans. The CNBC star added, I think that's counterintuitive. They have to change their thinking. Last year, Money Incorporated reported that Kramer has a net worth in excess of $100 million. He is said to have started investing in stocks during his career as a journalist. Kramer told CNBC that his humble beginnings should be an example to young people who are experiencing financial hardship. I know you might say, oh, Kramer's rich. I don't want to hear his lecture. But did you live in your car on the side of Interstate 5? He asked. Kramer said that when he was living out of his car, he continued putting $100 into a stock index fund each month. I put that money away and it made me a millionaire, he said. I'm not calling for something draconian. I'm not saying don't go out. What I am saying is don't spend money each week that you shouldn't have, Kramer said. He said that young people should use whatever they spend on discretionary spending and pour it into investments each month, even if it's the equivalent of going to 2 movies or a bottle of wine. Just keep it consistent. Over time, stocks have been proven to be an unbelievable asset, he said. And Kramer, no. So people always say, I have nothing to invest, so I can't invest. I hear that from people in their 20s all the time, Kramer said. But if you have a few bucks to spend going out, then you have money to invest, he argues. People have a million excuses why they don't want to get rich. So a recent survey conducted by Deloitte found that 29% of Gen Z millennials said cost of living was their top concern. Just a quarter of those surveyed said they can comfortably cover their monthly living expenses, while nearly half said they live paycheck to paycheck. Now, this is also like an interesting thing, right? Because technically, Kramer's not wrong. And if we were to put it into this perspective, if you were to get like a Starbucks coffee every single day and also basically eat fast food every single day for like lunch, maybe dinner as well, that's about like 25 to $30 per day that you're spending, right? Well, if you were to instead put that money into the stock market, like a stock market index fund, like SPY or some sort of Vanguard or mutual fund or whatever, right? But just tracks the S&P 500. And if you were to be consistent with that over years, you would retire a millionaire due to compound interest. Like due to the power of compound interest, you would actually retire a millionaire. And another way to look at it too, right? If you weren't making debt payments to like a car company for your car that is too expensive for you, you could become a millionaire by doing the exact same thing, right? If you're able to cut down your costs, you could do the exact same thing and become a millionaire, right? Because depending on when you start, it might only take you like $150 per month or $300 per month or a little bit more, again, depending on when you start, to retire a millionaire, right? And a lot of people find that their sort of lifestyle doesn't really allow them to have the free cash to actually invest. And he makes a really good point where he basically makes a statement where people make a lot of excuses. And the thing is, people do make a lot of excuses. A lot of people complain about never really having any money, while at the same time, they are wearing very nice shoes. They are driving a very nice car that is probably worth the same as to what they make in a year. A lot of them go out every night or every weekend. A lot of them spend money on drinks at like a club or something. Like there's a lot of people who are just financially unaware or inept, right? Because the reality of the situation is if you are not really too familiar with personal finance, you're probably not going to be really good with personal finance because you just never really came across it. But one of the simplest ways to live a really good and very healthy financial life is simply not spending more than what you make in a year or a week or a month. And also try to, one, decrease your expenses, and then two, make more money, right? You really need to do both of those things. Now, technically speaking, you could create enough margin by choosing just one of them in terms of like having enough money to invest, right? So, technically speaking, if you're in a situation where for some reason you cannot grow the amount of money that you make per year, well, the other route would be to cut your costs. And depending on how much money that you save, can also be the money that you put directly into in a retirement account or into your investments, into stocks, crypto, whatever. Or if for some reason you can't really cut any more expenses, then you have to make more money. And depending on how you make the money or how much money you're making in excess can determine how much money you're able to really put into like an investment. But really, you should be doing both, right? You should be living below your means while also making more money. Like you shouldn't have to do or deal with like a lifestyle creep, but you should be in a situation where you are creating so much margin that you could pretty much do whatever you want in your day-to-day life and not even hit like 20% of the amount of money that you make per year, right? Like that's where you really want to get to. That's like an example, just because like the amount of opportunities that you have by having a really high margin of incoming money per month can really do wonders for your lifestyle, your mental health, your physical health, and just your future in general, right? And it just gives you way more freedom, right? When you have a lot of money coming in with very little expenses, you have way more freedom than the next person. You have way more freedom than probably any of your friends. So just keep that into perspective. If you want to learn how to get out of debt and master your money, go to 40inbox.com.